Welcome to Talk Tickers. Today we're diving into Mirum Pharmaceuticals Q2 2025 results. We've looked through the call, the numbers, the analyst takes, and, there's definitely a lot to talk about, some real momentum this quarter. Our goal, like always, is to give you the context, cut through the jargon, and really figure out what matters from this earnings release. So let's get into it.
Yeah, they really did deliver an exceptional second quarter. I mean, significantly exceeding expectations is almost an understatement here. They reported a GAAP EPS of negative 12 cents,
Right.
which compared to the consensus estimate of negative 33 cents, that's a pretty significant beat.
That definitely catches your eye. It's not just squeaking by. It suggests, maybe better cost control or things scaling faster than expected.
Exactly. It points to management having a tight grip on expenses as things ramp up commercially.
And that's just the earnings side. The revenue picture was, just as compelling, maybe even more so.
Oh, absolutely. Revenue soared to $127.8 million.
Wow.
Which just blew past the consensus estimate of around $108 million.
Okay, so a big beat on both top and bottom lines.
And importantly, that's a 64% increase year over year, 64%.
That's huge growth. No wonder investors reacted enthusiastically. Shares really jumped after the call, didn't they?
They really did. A strong positive reaction from the market.
Okay, so those headlines are fantastic. Great beat, great raise. But let's, peel back the onion a bit. For this deep dive, we need to understand what drove that. Where did that growth actually come from when you break it down?
Well, what's really fascinating is how clear the picture is. LIVMARLI, their flagship product, was absolutely the primary engine here. It pulled in $88.2 million in revenue.
$88 million just from LIVMARLI.
Yeah, and that's up an impressive 87% compared to last year. Just massive growth.
Okay, so LIVMARLI is clearly the star. What about the rest?
There are other bile acid medicines, so that includes Cholbam and Chenodal. They also had really robust growth. That portfolio contributed $39.6 million, which was up 30% year over year.
So still strong growth there too. It shows, it's not just a one product story, even if LIVMARLI is leading the charge.
Precisely. It demonstrates a kind of diversified strength within their commercial offerings.
And digging deeper than revenue, I always like to look at the balance sheet, the cash situation. Did they maintain a healthy financial position through all this growth?
They absolutely did. Mirum ended the quarter with a very solid $321.7 million in cash and investments.
Okay, that's a good cushion.
And maybe even more importantly, they reported positive free cash flow, about $20.5 million for the quarter.
Right, actual cash generated after all the expenses and investments. That's a key milestone.
It really is. It's a true measure of financial health and their ability to self-fund operations. And management was explicit. They expect to stay cash flow positive for the full year.
That's a strong statement, shows discipline and that the underlying business economics are really working as they scale up.
Definitely, a clear sign.
So with Q2 being so strong, it obviously changes the picture for the rest of 2025. How did they update their guidance?
Yeah, this strong performance directly led to a pretty significant hike in their full-year revenue guidance. Mirum now projects revenue between $490 million and $510 million.
Okay, 490 to 510. What was it before?
The prior guidance was $435 million to $450 million, so quite a jump.
That's a substantial raise. What does that put them on track for the full year growth-wise?
It positions them for close to 50% top-line growth for the entire year.
Wow. Almost 50% growth. That's a remarkable trajectory and a huge vote of confidence from the management team.
Absolutely.
Okay, let's switch gears slightly from the pure financials to the commercial side. What's driving that LIVMARLI momentum specifically? What did they say about adoption and market expansion? Yeah,
the commercial execution for LIVMARLI was definitely a key highlight on the call. Management pointed to accelerating adoption in both its main indications, Alagille syndrome, ALGS, and progressive familial intrahepatic cholestasis, or PFIC.
Right.
And what's particularly interesting, I think, is the story around PFIC. Well, initially, PFIC was mostly seen as a disease that showed up in infants.
Right.
Very early onset.
Yeah, that was the general understanding.
But now, with increased disease awareness, more genetic testing happening, they're actually finding a larger patient population with later onset. Think childhood, adolescents, even some adults presenting with it.
Ah, okay. So it's not just finding the known patients faster, it's realizing the potential pool of patients is actually bigger.
Exactly. It's like they're discovering the market is larger than initially mapped out. It effectively grows the pie for LIVMARLI and PFI.
That's a significant dynamic. And didn't they also launch a new formulation recently, something about a tablet?
Yes. That's right. They launched a single tablet version of LIVMARLI in the US back in June. The idea is to make it more convenient for patients, hopefully improve adherence, the usual benefits of a simpler formulation.
Makes sense. Was that impact felt much in Q2, or is that more of a future benefit?
It was launched late in the quarter, so the full impact wasn't really reflected in these Q2 numbers. But they said the initial feedback is positive. And on the international side, they highlighted durable growth, both where they sell directly and through partners, including the successful launch in Japan via their partner Takeda, also in June.
Japan's a big market.
It is. They noted Takeda's orders are periodic, so it might create some, quarter-to-quarter lumpiness in the international sales figures.
Okay.
But the overall trend internationally is clearly strong and contributing.
So looking longer term for LIVMARLI, management has some pretty big ambitions, right? I think I saw mentions of becoming a billion-dollar product.
They did. Management stated they believe LIVMARLI has the potential to be a, quote, $1 billion plus revenue brand.
That's a big target. What's the path they see to get there?
It's really driven by continued growth in the current indications, ALGS and PFIC, especially with that expanded view of the PFIC market, plus future label expansions they're working on.
Right, the pipeline comes into play there. We'll get to that. What about the other products, Cholbam and Shinodal?
Yeah, the bile acid portfolio. They also saw strong performance, steady demand, and they mentioned increased engagement after a prior approval for another drug, satralizumab, earlier in the year seemed to help raise awareness or engagement. And for CTX, which is another rare condition, they're making steady progress finding patients. They expect gradual growth there, sort of rounds out their liver disease focus.
Okay, so solid execution across the board commercially. But like you said, the future, especially in biotech, hinges on the pipeline. This is where it gets really interesting. What advancements did they highlight?
Yeah, they laid out a pretty clear catalyst path stretching into 2026. Lots to watch.
Okay, what's first?
First up is volixibat. They've got two big studies ongoing. The VISTA study, that's for primary sclerosing cholangitis, or PSC. Enrollment is on track to finish this quarter, Q3 2025.
Okay, enrollment completion soon. When would we see data?
Top-line data is expected in the second quarter of 2026.
Q2 26 for PSC data. Got it.
And they sound pretty confident. The program already passed an interim analysis last year, which is a good sign. Plus, they mentioned they think their original assumptions for powering the study, basically how many patients they needed to show an effect, were quite conservative.
Meaning they might have a better shot at hitting the endpoint, even if the effect size isn't huge.
Exactly. It sort of builds in a margin of safety, statistically speaking, increases confidence.
Okay, that's VISTAs for PSC. What else for volixibat?
There's also the VANTAGE study for primary biliary cholangitis, PBC. That one's also progressing well, and they expect enrollment to complete sometime next year. So another major catalyst down the road.
Two big shots on goal with volixibat then. What else is in the pipeline update?
Next is actually more with LIVMARLI, an expansion effort. The EXPAND Phase 3 study is looking at additional types of cholestatic pruritus, the severe itching associated with these liver diseases.
Okay.
This study actually came about because they were getting a lot of compassionate use requests for LIVMARLI in patients with other conditions, like biliary atresia.
Interesting. So real-world demand kind of pointed the way.
Kind of, yeah. And enrollment for EXPAND is expected to complete in 2026 as well. They estimate this additional patient population alone is at least as large as the PFIC market. So it's a potentially significant label expansion.
Wow, okay. That could really broaden LIVMARLI's reach even further. Anything else major?
Yes, and this one is quite different. It's MRM 3379 for Fragile X syndrome.
Fragile X, that's not a liver disease, that's a neurodevelopmental disorder.
Exactly. This is their first step outside of hepatology, a clear signal of broader therapeutic ambitions.
Right. So what's the status there?
Their IND, the application to start clinical trials, has been cleared by the FDA, and they plan to kick off a Phase 2 study in the fourth quarter of this year, Q4 2025.
Okay, Phase 2 starting soon. What will that study look like?
It'll enroll about 52 male participants, aged 16 to 45, who have genetically confirmed Fragile X. They're focusing on males in this age range, as they often have significant cognitive impacts. The primary endpoint is safety and tolerability, as you'd expect in Phase 2.
Standard stuff. What about efficacy?
There's a key secondary efficacy endpoint focused on cognitive measures, specifically something called the NIH Toolbox Crystallized Cognition Composite.
Okay, a cognitive assessment tool.
Right. And importantly, they said the FDA has indicated that this could potentially serve as a primary endpoint in a later Phase 3 trial.
Ah, that's significant. Getting that kind of feedback early helps de-risk the development path quite a bit.
It absolutely does. It makes this move into a new therapeutic area seem, well, maybe a bit less risky than it might appear at first glance.
That's a packed pipeline update. Volixibat data, LIVMARLI expansion, a whole new area with Fragile X, lots happening. So for you, our listener, pulling this all together, why does this quarter matter so much?
Well, it really presented a compelling beat and raise story, which the market loves. But beyond that, it fundamentally underscores Mirum's exceptional commercial execution in their core rare disease franchise. That's step one. The way they're accelerating LIVMARLI adoption, especially with that expanding view of PFIC and the strong international uptake, that's a massive value driver. It really bolsters that billion-plus potential for the brand.
And the market definitely seemed to agree with that assessment.
It really did. That stock reaction, soaring 12% the day after the call on really high volume, that signals strong investor confidence. They're buying into the story.
And you have to put that in context, right? The broader biotech sector hasn't exactly been setting the world on fire recently?
Not at all. If you look at biotech ETFs like IBB or XBI, they've actually lagged over the past year. Mirum shares, though, have significantly outperformed those benchmarks. Real strength against the tide.
And the analysts are following suit.
Yeah, sell-side analysts have responded constructively. We're seeing price targets moving up into the mid-$70, even $80 range now. It just reinforces the picture of a company showing really effective financial discipline while at the same time aggressively pushing forward a robust pipeline.
A compelling combination. Okay, let's shift gears into our final segment. Time for some not financial advice trade ideas. Let's put on our investment committee hats. Given this stellar Q2, the guidance hike, that 2026 catalyst runway, but also the fact the stock has already run up quite a bit. What's your pitch for a, let's say, wild yet plausible trade?
Okay, yeah. My thinking here isn't just buy the stock. It's had a good move. Biotech is volatile. We know that. So I'm proposing a long call spread, specifically on Mirum, targeting the December 2025 $75, $85 strike calls.
Okay, a call spread. Buying the $75 call, selling the $85 call, expiring December 25. Explain the thinking.
The idea is to capture more potential upside as we get closer to those pipeline catalysts, like the PSC enrollment finishing this quarter, but doing it with defined risk. You know exactly how much you could lose. We're essentially betting that the market still hasn't fully priced in that billion-dollar potential for LIVMARLI, or maybe the de-risking of Volixibat after they mentioned those conservative study assumptions.
And selling the higher strike call helps pay for the one you're buying.
Exactly. The premium you collect from selling the $85 call reduces the cost of buying the $75 call. It gives you a cheaper way to get exposure to upside. Especially since analyst targets are already pushing into that $75, $80 range, it kind of hedges against minor bumps in the road while positioning you for a bigger re-rating if things continue to go well.
Okay, defined risk, capturing potential upside into next year's catalysts. Makes sense. What about for someone with maybe a bit more risk appetite, a stronger conviction?
All right, for the more aggressive player, consider a synthetic long position by selling out-of-the-money puts. Specifically, I'm looking at the ERM June 2026 $50 puts.
Selling puts. So you collect premium now, but you might have to buy the stock at $60 if it drops below that by June 2026.
Correct. This play assumes that the current momentum, the pipeline catalysts, which are somewhat de-risked, plus that nearly $322 million cash cushion and positive cash flow. That makes a huge drop unlikely. You're taking on the obligation to buy shares, but at a price significantly lower than where it is now. The premium you collect upfront is either income or it effectively lowers your purchase price if you do end up buying the shares.
And the June 26 expiry gives time for it.
It gives plenty of time, enough to see some of those initial pipeline readouts like the Vista's PSC data and watch the commercial ramp continue. It's really a conviction play. You believe in management's execution, you believe in the value of the assets, and you're using time and implied volatility to your advantage.
And if the stock just keeps climbing.
Then the puts expire worthless, and you just keep the premium you collected initially. Pure profit, no shares involved.
Interesting. Two different ways to potentially play the momentum and pipeline story. Okay, let's wrap this up. Mirum Pharmaceuticals undeniably put up some impressive numbers in Q2 2025. Really strong commercial execution. LIVMARLI is firing on all cylinders, PFIC market expanding, And it all led to that big guidance raise.
Yeah, and you've got that healthy financial position, positive cash flow now expected for the year, and a pipeline stacked with catalysts heading into 2026.
Yeah.
It paints a pretty compelling picture for continued growth.
The market's strong, positive reaction definitely reinforces the confidence in their strategy and their ability to deliver. It's certainly a story worth keeping a close eye on.
Absolutely, especially as those pipeline readouts get closer.
All right. Now remember, everyone, this conversation is purely for informational and discussion purposes. It is absolutely not financial advice. Always do your own homework, your own due diligence, and definitely consult with a qualified financial professional before making any investment decisions. We appreciate you tuning in. Let us know your thoughts on Mirum's quarter. We'll catch you next time on Talk Tickers.